This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujasek from Trend Spider. We have a
breaking news. What is up, everybody? Welcome back to another episode of Benzinga Live. I'm your host, producer AB. We've got a packed show for y'all today. We've got Mr. Steve Kalasian hanging out backstage. We're going to talk to Steve here in a minute, see what he's been watching, see what he thinks about the market right now. After that, we've got Rob Roy from Wealth Builders HQ, and then at around 12:15 p.m. Eastern, we will have Mr. Options Mike talking about, we'll be talking about some options. So, as you guys can tell from the title of today's show, we will be talking about Target and Target stock. As you guys, I'm sure, are probably well aware by this point, Target is being boycotted by a lot. It seems like basically like half the country right now over the fact that the country had some Pride merchandise at its store. And similar to the Bud Light thing, there are a lot of social media campaigns going around right now trying to get people to boycott Target. There's even a song out there rising to the top of iTunes that is titled Boycott Target. Target, as a result, its stock has dropped more than 20% in the last month, which for a company the size of Target, that's a big move. And Target stock is typically one that isn't super volatile. And this is where, in stories like this is where kind of having good information, access to updated news is really important, which is why I would recommend Benzinga pro.benzinga.com, completely free 2-week trial to try it out if you would like to. But let's just take a look at, so this is Target's weekly chart. You can see this huge red candle. This was from the bad earnings report about a year ago, May 16th, 2022. And this is the past three weeks to a month. So we were at about 160, dropped a couple weeks in a row, down to below 130 now. So here's the thing with Target right now is I think a lot of people are going to be, avoiding shopping at Target in the shorts. Sure. Overall, do I think Target's going to go out of business? Probably not. I brought this up on the show the other day. We've seen this play out before, kind of this whole boycott, go woke, go broke thing that, people tried to do this with Nike a few years back. It didn't really work. I will say it does seem like both the Bud Light and the Target ones seem a little bit more coordinated, seem a little bit more serious than what we saw with Nike a couple years ago. But I don't know. It's just there are so many American U.S. companies out there that have done some sort of marketing like this throughout the years. I saw yesterday someone posted a pic, or someone retweeted. I'll find it right now if you guys want to see it. From Tesla, just a couple years ago was posting Pride stuff, and it's you don't see people going out there trying to say let's boycott Tesla. So I personally, like I said, I've been surprised so far over the past couple weeks that these boycotts have had such influence on Target stock or on Budweiser stock. But again, at the end of the day, do I think these companies are going out of business? No. Am I going out buying the stocks right now? Probably no. Probably not. The only way, or the only reason I think I would go out and buy some Target stock right now is if I was, or what I would probably do is trade some call options if I expected some sort of a short squeeze, because I bet there are a lot of people going out there thinking okay, this stock's going to keep going down. People have this, boycott against the company. I'm going to go buy puts. And if enough people do that, if enough people buy puts on the company and then the stock doesn't go down, people are going to start having to cover. And, you could see a little short squeeze. I'm not saying you're going to with Target, but I'm saying that'd be kind of the only way I'd be looking at playing this. Okay, wait here. I found the tweet. So Elon has made himself, seems like has gotten more Let's just give this tweet a second to load. So this is from June 1st, 2019. So June is officially like Pride Month. And Tesla posted this, what was that, 4 years ago? Yes, we have Pride tees at shop.tesla.com. And so it's like, I think if people really start right now going out boycotting every single company that does some sort of like diversity, LGBTQ, advertising for American companies, then I think we will be in a tough spot, because I think probably more than less have done something like that over the past few years. So again, we'll see. I don't think Target and Bud Light are going anywhere. I would wait for this story to kind of develop further, like before going out and buying these stocks right now. And I think there's some other things going on with Target. It's not just that. You had some kind of weak retail numbers across the board today from different earnings yesterday. I know Macy's missed the mark. So, yeah, you had Macy's. JWN, Nordstrom actually had a good report. Stock's only up 3%. Was up more than 10% after hours at one point. But I mean, this stock has been ugly for a while, so I don't know why people really care that much about it. But all right, let's get to our first guest of the day. I see Mr. Steve Kalasian hanging out backstage. So without further ado, let's give Steve one of our very special Zinger Nation welcomes and bring him on the show.
This is Benzinga Live. Spencer.
Mr. Steve, how you doing today?
Hey, good morning, everybody. How are you? Hey, Aaron.
I'm doing well. What's happening in your world? How you doing?
Okay, a little craziness the last couple of days, huh? NVIDIA dropped almost 40 off the highs and right back up. And AI had bad earnings and rallies of 5 off the low this morning. You're seeing but the Dow starting to catch up now with the likes of Boeing pushing up to the highs of the day. And market with the new money coming in June here, market's still stuck in this 100 handle area for the last almost 4 weeks now.
Yeah, so I mean, like looking at right now the overall indices, so just pulling up the SPY, we hit back above the 420 mark today. At what point, are you like getting in short? Are you getting long? How are you playing the SPY right now?
I think I still can maintain you have a mountain overhead resistance here, and you still have a high PE ratio. Again, I think this is a more opportunity to be selling the market than versus taking on any new long positions. I think that there is a very good chance of a steep pullback in the next few months, and if that happens, it may be a double bottom down at that level, or but either way, the Qs are going to outpace the overall market, the Nasdaq.
So you'd be buying the Qs right now over
not here on any weakness, on any pullbacks. If the market, as I anticipate, push down the Dow, and the Russell's showing showing some life today, but overall, I'd be looking, if we do get some type of a push down, I think the Nasdaq's going to outperform the S&P, the Dow, and the Russell in the years to come.
Got it. That makes sense. Speaking of the Russell, I'll pull up the IWM, the Russell 2000, which tracks 2,000 of small caps in the United States. I mean, this thing has been lagging the overall market for a while now. I mean, going back to November 2021, do you expect small caps to start getting some love here at some point?
No, not at all. I think the regional banks are still in trouble. I think they're on borrowed time, as I told you last time. And I think that, this is going to be an underweight. I would not look to put money in this sector at all. I think the money to be put in is the future, which everybody's AI crazy. So I would be buying on any severe pullbacks, the Qs or the TQQQs, or names. I'm not really into big names like the Metas and all that. I think the indexes alone, or the Qs and the TQs, should is fine by me. For you have to worry about earnings and all these names 4 times a year, but the Nasdaq's on the list. It's only a couple stocks really creating this whole buzz right now, about a dozen of them. So I think it's gonna outperform the market, even if we do get any type of sell off in the near term.
Yeah, so I mean, Steve, you've been doing.
JP Morgan was saying that their high target was 42.50 in their model. I heard a guy say about a week and a half ago, and that they were expecting a test of the lows by the end of the fall, and then another push right back up. So that's JP. I believe it was JP Morgan top analyst. But I mean, the banking stocks cannot get going here. I mean, today you saw a pencil down. Goldman Sachs dropped $6 on one bond and rallied 2 or 3 off the lows on that. But the banks are just like a glacier here. People want alpha. The Nvidias are moving $10 in either direction. Meta pushed up to new highs here. Apple. So these are the names that people are piling into. I mean, Microsoft's not acting that well today, but it had a monster run. I mean, AMD had terrible earnings. Stock went from 81 to 130, 132. Ran $51. I mean, so people are piling up in these names, and these names are going to continue to be bought on weakness and on any real capitulation. God bless you, to the downside.
Yeah, I mean, I think so. AMD obviously running with NVIDIA, and so speaking of NVIDIA and this incredible run, we mentioned some other stocks. I mean, Apple kind of inching back up toward highs. Netflix back above $400 today. Just been on an incredible run. You've been doing this a while, Steve. Walk me through kind of the cycle of one of these hype runs where everyone everywhere is just talking about AI. All of a sudden, then you see NVIDIA stock up 100% in a couple months.
I think what you mean. I think it's going to be a herd mentality. I think I've been doing this so long, something always comes out of left field, right, to cause the market to drop. And I just think there's too much complacency here now, and I think that people are very, very I think it's a fool's game to chase the market here. You still have 3 more basis points to get to a 2% inflation target of 2%. It was I think I told you last time, we have a record high consumer debt, $17 trillion. People are living on credit cards. I think the banks are in a lot of trouble with the high interest rates, the regional banks. It could be any form of anything. It could be China with Taiwan. It could be anything here that can cause this. I don't think we're in a roaring bull market. I think that's completely insane. Yes, AI is taken, but the S&Ps, it's the Nasdaq that's running, and the S&Ps aren't really moving much. You know what I'm saying? So the overall S&P 500 stocks. I mean, oil just had a $2 run just now. Oil's been under a lot of pressure. That's heavily weighted in the S&P. I'm not really a fan of oil here. I think oil was pretty much telling you when it was just trading below 67 or a couple of days ago. The low was 63, I think, for the year. I think oil is telling you we're going into recession. Natural gas is going to break the 2 handle here very soon. Looks like. So I think that everybody's all hyped up on tech, and this is where it's going to be for the next 12 next another 1 to 2 years.
Yeah, just flipping through some numbers here. You mentioned oil. Gas prices have been slightly falling in the United States. I mean, it seems like a while ago, Steve, that gas prices was all that anyone wanted to talk about for a little bit.
Yeah, sure, because oil was $121 a barrel.
Yeah, I know, and it was crazy. And so, yeah, it's certainly seen the oil prices lower indicates that people are worried about some sort of economic downturn, some sort of global, recession. But looking at this, so this is interesting. This is from the CME watch tool. About a week ago, the odds were like 50-50 that we would see a 25 basis point hike. Now that is showing that it's a 74% chance that we will not see a hike, Another number that I know we've looked at before together, Steve, is this AAII sentiment
Mhm.
survey. The new numbers that came out yesterday, or for the week ending yesterday, people getting more bullish. So you can see the number went from 27% people bullish last week to 29%.
Mhm.
The bears went from about 40% to 36%. So people are getting more bearish, less bullish. But while looking at this, Steve, I still notice that there are still more retail investors that are bearish, around 37%, than that are bullish, which is about 29%. So still leaning a little bit more toward the bear side for retail investors, but
Mhm.
starting to kind of creep toward a little bit more bullish territory.
Yeah, I mean, I think most people. I mean, remember months ago that number was into the high 40s or low 50s. I remember. So this has come down quite a bit. And I mean, the bullish camp went up about 1.5 points. But I agree. I don't think there's going to be any rate hikes in June. I think they're going to sit on their hands for a few months. I don't think rates are going to go. Maybe there's a 20% chance one more quarter point. I don't think they're going to do it. And I think in the presidential election cycle in 2024, I think they're going to look to cut rates. And at that time, I think we'll be in a recession.
Yeah, I mean, it certainly will be interesting to see. We've had our eye on economic data. You had, I believe payrolls come in better than expected today. So, still some numbers coming out that the economy is holding up. But then you have certain things like you mentioned, commodity prices, price of oil, indicating that people are still worried about a potential recession. So,
Mhm.
certainly going to be important to watch those economic numbers and try to figure out how the Fed is interpreting them.
100%. Mhm.
All right, Steve. Well, anything else you want to touch on before I let you get back on with the rest of your day
No,
and get back?
just have a great weekend, everybody. And again, I think this is a very selective market where certain names that are, I think the lows are in for the year on those names, and those are the names we playing the Apples, the Metas, the Microsofts, the AMDs, Nvidias, and all the big caps. So the things like 5 or 6 more. My favorite is the QQQs for the year, but not here. A lot lower. If you look at the chart, there's like 5 gaps, and I think that 280 gap can be filled on the Qs before we head back up.
Got it. There you go. All right. Well, Steve Kalasian, thanks as always for joining us on the show. You as well. Enjoy your weekend, and we'll talk to you next week.
Thanks, Aaron. Take care, everybody. Thanks a lot.
Alrighty, y'all. It is noon on the dot here in the Eastern Time Zone of the United States of America. Let's do a quick checkup just on our overall indices real quick. Let's get back to our trusty Benzinga Pro. Oh shoot, I almost just screwed up. I think I can just click back again. Nope, that'll take us to gas prices. Oh, one more time. There we go. All right, guys. Another quick rundown for the rest of the show. We've got Mr. Rob Roy hanging out backstage. Going to bring him on momentarily. After that, we'll be talking to options. Mike, woo! Look at this little rally. Look at SPY running. Looking at the 5-minute candles here, you can see over the past 20 minutes or so, we've just pushed higher from about 420 up to 421.30. Up now 0.8% on the day. Qs leading the way, trading up slightly higher than the SPY. So tech having a strong day. Your Dow Industrial Average, DIA, up about 0.5%, so lagging a little bit, but also having a strong day after a couple down days. Your sectors, XLE up about 1.5%. Energy having a good day. XLF up about 1%. We looked at Qs, but what about the semis? Semiconductors up about 1.5% as well. So overall, I mean, like things are trading up. It seems like Apple inching back up to that 180 level. Take a look at Apple's chart on the daily chart, getting back up to basically these, all-time highs of 183. Someone in the chat, let me know. Did Apple just pass the $3 trillion market club again with today's price action? We're at 2.8 trillion according to Benzinga Pro right now. Of course, Nvidia surpassed the $1 trillion mark the other day. Netflix up another $6, back above the $400 level. Looking at the daily chart of Netflix, you basically got to go all the way back to February of 2022 to get the last time that Netflix was trading this high. Tesla continuing its strong run around 205. You can see here over the past couple weeks, Tesla has gone from about 150 up to about 205. So strong run for Tesla there. You know what is not trading up though? Mr. Target. Mr. Target down another 2% today. Look at the daily candles on Target. Just a straight bloodbath the past couple weeks. May 18th, you were at 160 a share. 2 weeks later, below 130 a share. More than 20% of Target's market cap wiped off in the past month or so. Again, this is stemming from a boycott over the fact that Target was selling Pride merchandise. I'm not going to get political. I'm not even going to share my thoughts on all of these things. But what I will say is I don't think Target's going to go out of business by this. With that said, I'm not buying the stock right here because I don't know if the story is finished. And looking at, Target's Budweiser stock, clearly these types of boycotts have impacts on sales and revenue and how the stock is viewed, speculation of the stock. But again, I don't think these stocks are going out of business. In fact, I mean, if I go to, if I keep seeing things about boycott Target, I might go to Target in a week or two and just look for some really good deals. CCJ calls. What is CCJ? Am I supposed to know what this is? Uranium producer. Has uranium been doing well? Holy cow. Oh, never mind. The UUU. Wait, what's the ETF? All right, guys. Let's get to our next guest. Mr. Rob Roy. It's been a minute since we've had Rob on the show, so you know what we needed to do, Zinger Nation. Let's give Rob our very special Zinger Nation welcome URA. Okay, that's the uranium ETF. Damn, what's going on with uranium today? Up 6.5%. All right, sorry, Rob. My ADD got me sidetracked. All right, without further ado, let's go ahead and give Rob that very special Zinger Nation welcome and see which stocks Rob's been watching. All right, Mr. Rob, how you doing today? Oh, I think we got you on mute.
Oh, there we go. How are you today? I'm great.
I'm good, man. The weather's nice here in Detroit. Market's doing well. No complaints.
There you go. It's probably 78, 79 degrees outside by us right now as well. So it is gorgeous out. I'm loving it.
Awesome. Hell yeah. Well, Rob, what have you been trading? What have your strategies been like?
So today, 2 trades off. One was on Goldman Sachs, guys. And, I've talked about this base strategy before. And if we've got some time, I'd love to go into one of the setups today. But if we look at Goldman Sachs on an intraday basis, on an end of day basis, okay? So this last candle is today's candle. This is June 1, right, on Goldman Sachs. We closed right near a key level, which is a fib line. For those of you that want the exact level, as far as the percentage, we closed near the 382 Fibonacci level, right? Nice move down. We came up, vacillated for a while. We got to that 382. Today we gapped up slightly, or opened slightly higher, small gap. And then we pushed down below that 323.64. The key is going to come down to what did it do at the 323.64? Did it blow through? Did it gap through? What actually happened? If we go to intraday and look at TradeStation, I'm going to bring this in a little bit bigger to make it easier to see. Here's the small gap up right here. Actually, let me grab a drawing tool. Here's our small gap up on 5-minute candles we've got here. You can see 5, right? We got the small gap up. We pushed down and we closed down here. The next candle, we moved up. Now, that line is 323.64. On the second candle of the day, we closed at 323.62, 2 cents away. And then what happened? We rolled over. This is a classic entry signal. It works amazing when you find a clear and concise entry, clear path to the next move, concise, finding the right place to get in. This gave us the minimal risk in the trade. We would have been just above our swing high for the day for our stop. And we moved down from 323.64. We got all the way down to 314. But guys, we made this move down. We made this move down. This little bit of a pop back up. So we're in this trade about 322.5. And we made this move down. After that candle, there was no belief that we were going to just continue to push. We're going to watch a little bit. And we're at about 317. So 22 to 17, you're looking at a $5 move. Great setup on that trade. But this, Aaron, is a classic. You hear me talk about it every week. It's a classic setup that if most traders would just focus on these types of setups only, it would give them the best opportunity to succeed in the market.
Yeah, I think right now, Rob, like so many people have, lost money over the past year and a half. If they were buying the market at the highs, then they've been sitting on, they've been holding the bag essentially for the year and a half. So people are looking for new strategies. People are looking for strategies that they can, consistently make some money. Can you talk a little bit about, I guess, just your overall strategy and we've talked about it before, but of trying to hit singles repeatedly versus trying to hit home runs?
Sure, and that's what this type of setup is, but I want to make it even simpler. There is a trade setup, and you can write it down. We've coined the phrase. It's a switchback trade, right? So basically what that does is it allows us to identify stocks that have the potential to move in two directions, up and down, right? So we would have done this last evening on the market close, right? So if you look, we closed last evening on SPY. We closed right near our Fibonacci level, a little bit below, but we just want to be close and in that area. Now, I will say this works extremely well with Fibonacci lines. It may work with support and resistance. I don't know. I've not tested it there. We've only tested it on the fibs. We've got about 20,000 setups that we viewed this on, right? And we know how well it works and performs on fibs. So we look for this. And what's this saying now? We've got the opportunity to move up and we've got the opportunity to move down. Each of them would need or require a key setup, a clear path to the next target. So if we moved up, we've got a clear path to our next fib line, which is right up here at about 424 or so. And if we move down, our 414.5 is our 21 moving average. So we've got some room to move either direction. We've got a lot more on the upside, but we've got some room in either direction. Today, we opened up right about where a little bit higher than we closed, but right about where the open of yesterday was. We opened today, right? And that is, if we look at a fib level, that is 418.31, right? So now if we go back and look at SPY, we pushed down. From the open, we had a small move up. We pushed down. We popped above. So now what am I looking for? Aaron, I want to see a pullback and a close near that level and then a bounce, or at least a pullback and a bounce. Doesn't have to close. It would be a better setup if it did. It did not. It failed. Okay, so we're going to pass on that setup. We're not taking that trade. We're watching. So if we go by what's happening on this green candle, Aaron, or let's go to the one before, right? I am sitting in position one in the chair. I'm back here. I'm just watching the market, just chilling out, right? And that was on this candle right here, right? On the second candle, right, the number two, I'm back here, and now I'm sitting forward, straight up, saying, all right, now I need to focus on this. What's it doing? The third candle, it backed down again. So now I'm back here, right? And I'm just waiting. I'm waiting for the move above that fib line. Right? We got our move up once again on this. We'll just call it number 4 to keep it even, right? Now I'm back here in position number 2 in the chair. And on this candle, number 5, we retested that wick, pulled back. We retested. It doesn't have to hit exact, but that 418.31, and we bounced. And the market was waiting for it. We pushed up. We came back. We broke again, popped our head up, got the retest and the bounce, and there was the entry right about 419 and a quarter, 419, somewhere around there is the entry. We're at 421 and a half, 421 a quarter right now. So we've got about a $2 move so far on SPY. And all we're looking at here is this. We're looking to identify the candidate. Remember, identify, enter, manage, exit. Those are the 4 components. We identified the candidate because it closed near a key level. The entry comes because it broke out and retested, either up or down, it doesn't matter, but it broke up and retested to the downside, right? Or moved up, retested, bounced. Either way, right? We got the entry in there, right? The management, the third component, identify, enter, manage. The third component says, how are we going to handle this trade? Are we going to scale out of this trade? Are we getting out all at once? Are we setting a trailing stop? That's the overall management technique in there, right? We're watching right now the 8 moving average for a break below on the close. That is where we're going to get out of this trade, okay? So that's our management technique for it right now. And then, of course, the exit would be we're taken out of the trade. Now, I want to be out of this by the end of the day. So the moving average may not happen by the end of the day. Around 3:45 p.m. Eastern, I want to be out of this trade no matter what. Good, bad, or indifferent, I want to pull the trigger and get away from it. If you feel you want to hold a contract or 2 overnight, that would be up to you. Right now, I'm more interested in day trading these than I am swing trading them. We've done 30 of these in the last, since May 9th. We've done 30 of these that we've put out there, all free to service to our traders. And of those, we've had one of them go against us. 1, 2, 3, 4. Well, heck, I can pull it over. I don't have all the stats on it, but this is the legend. These were from yesterday, so I don't have any details on them yet, right? Day's not over. But the orange ones never went off. There were no trades, right? The green ones were profitable, and the red ones went against us. So we've had one. LMT was the only one that went against us for the day if we took that trade. Lululemon we did amazing on. That was a great setup, right? The Qs was a great setup. Netflix is always a good setup, right? So this setup, Aaron, gives any trader the opportunity to find a candidate near a key level, wait for it to move a little bit away from that, let's say up, and then retest and bounce. Just like we had here, we moved up on this candle, retest and bounce, take the trade, set your exits up and walk away. Whether it's a trailing stop, whether it is a hard target, you could set it up, walk away, and go on with the rest of your day and not be focused on sitting there all day like this. Should I get out of this trade now?
Got it. So, and sorry if you already explained this a little bit, but with right now, I mean, like, for example, like SPY is trading up today. You have stocks like NVIDIA, Netflix, like we mentioned, Apple, that have just been like incredibly strong. At what point, when does that divergence of the moving averages get to the point where you're like, okay, this is due for a little pullback?
You talking about from a daily chart, or on this one, we're looking at a 5-minute?
Just in general. I mean, like a daily, let's talk about like Netflix, for example. Netflix just passed up above $400 today, has been on a really strong run. Like, at what point, does this hit a certain fib level where you're like, okay, this is due for a pullback, or are you just kind of like, well, this is strong until it's not strong anymore?
And that would be part of it. It's strong until it's not, right? We are still within the confines of clear levels, right? Meaning if we get to the point here, if I kind of scrunch this down, the chart's going to look a little weird. But if we start getting to the point that we get up here above that 465, let's say, this line right there, the Fibonacci level itself that I've got drawn is not very valid anymore at that point if we allow it to go that far. One of our redraw rules says we get above the negative 618, right? Which is an extension. So if we get above there on a close, that is a place that we want to consider redrawing. We don't have a place to redraw yet, at least not a good one. So we would have to wait for the ideal setup of what to draw on there. But Netflix, NVIDIA is another one. Those are two of my top 3 candidates that I look to trade daily. And, if you were following along with me last week in some of the free stuff that we do, we had our fib drawn off of this high as it pulled back on this orange bar, this orange day. On that day, we had our fib drawn off of here, thinking, all right, we had enough of a pullback in here. We're good after that great news on their earnings. And what happened? Well, we bounced the following day, and then we gapped up and pulled back. So we switched those fibs to that 419.38. So if you look, we are on 524 at 298.06 up to 530 at 419.38. Right now, are they overextended? I don't know. I think it was a really big move. I think the $1 trillion mark was a big deal to hit, trying to get above that 4 and jingle just to get there. So I think that was something to shoot for. It's kind of when oil hit 150, we did it just to do it. I don't know if we're going to hold this far, but I'm watching the daily 8 moving average on this, Aaron, and that's what I'm looking for me to buy more of this, to enter long overnight, holding long-term positions. I'm looking for pullbacks to that 8 moving average and a bounce before I go ahead and take that trade.
Yeah, I mean, that's incredible. I think like having, it's just so interesting. Like, so I think so many traders out there, especially newer traders, kind of just trade off vibes, or they're like, okay, this has been up 5 days in a row, I think it's going to go down. But seeing how you have these trades set up, like this is how a real trader does it, and how someone is able to do it in a systemic manner, so you're able to win time and time again and not just get lucky once or twice.
Correct. And that's the whole idea. You know, I go back to when I was a kid and we used to have carnivals at the school, the church and the school that I went to as a young boy. And they had gambling in there. My grandmother was one of the people behind the table, and she would let me put money in once in a while. And I would watch the over and under, and I would see them go 5 times it was under, and I would bet on over. Why? Well, because it can't do it again, right? I think too many people trade that way or gamble that way, whichever one you want to look at it. And not have a really good system. One of the things we strive to do is always give you all of the rules, all of the details of how we do these trade setups. I mean, I just laid out for you what took me years to develop and have my team and then some of our highest level coaching students test before we ever release this to the public. And this trade setup works time and time again.
There you have it. Well, Rob, we're coming up against the clock here. Anything, you want to hit on today that we have not gotten to already?
No, I mean, keep your eyes on Meta and Costco right now for today. I'm still waiting for the bounces off of their key levels. If we get those, there's still opportunities today. And then, Aaron, we do have a free service that allows people to get these trades emailed right to them every single day. We shoot for 2 to 3 times a week. We're usually closer to 4 times so that we send them out. So we shoot an email out. So if they just go to tradinglikeaboss.com and come down here to what else? Trade with Rob, right? And it's free, guys. There's no cost. Everything that's on this page, Trading Like a Boss, is all free, right? But take advantage of that service where you're going to get those candidates, practice with those before worrying about trying to find them on your own.
I dropped that link in the chat, so make sure to go check it out, tradinglikeaboss.com. Rob, thank you, as always, for joining us on Benzinga Live today. I hope you have a great rest of your day and a great weekend.
You too, Aaron. Thanks a lot. Take care, everybody. Good trading today.
Bye-bye now. Alrighty, y'all. That was Rob Roy, tradinglikeaboss.com. Link is in the chat to learn more from Rob and the other great personalities at Wealth Builders HQ. If you want to learn about fibs, want to learn more about technical analysis, want to learn how to make money trading, I recommend going to tradinglikeaboss.com and seeing, all the different educational materials that Rob and his crew are offering there. All right, guys, let's keep the show ticking. We've got our next guest hanging out backstage. I see my man Options Mike. It's been a minute since we've had Mike on the show, and a lot of market development since then. I'm curious to hear Mike's thoughts on the market. So without further ado, let's go ahead and give Mike one of our very special Zinger Nation welcomes, and we'll be talking some options and some charts when we come back. All right, Mr. Mike, how you doing today?
AB, how are you? Zinger Nation, what's up, man?
I'm good. I think I can't speak for the whole Zinger Nation. Well, maybe I can. I think we're doing well. I hope so, at least. Unless people got caught in some, shorts or something today, and now SPY's ripping up even further.
Almost that got caught short today.
Almost a full % today on the S&P 500. The title of the show talking about Target. That's one thing that's not trading up. Have you been following these, the move in Target stock over the past couple of weeks?
Yeah, I mean, it's down 9 days in a row. Maybe today's 10. I didn't really look at it today other than pre-market because they had a downgrade. But, you want to talk Target real quick. I mean, that's the name I just want nothing to do with here. They obviously have a world of problems right now. They have, stuff now that's getting political going against them. This is the type of chart you never chase short. And people said, should I buy it here? Well, it's got to give you a reason to buy it at this point. So for me, if you have to buy retail, and retail looks like the weak link, I think Costco is a better name to buy here. I would not be buying Target. This thing can hold over 5-10, it can run. Even Walmart, finally, a better looking stock. But overall, retail is not a great looking sector right now.
Yeah, and I think that's what's interesting. I think as looking at retail as a whole, looking at Walmart stock, for example, if you look at Walmart stock just over the past month, so Walmart stock is down about 2.5% throughout the past month, but over the past couple weeks, it's moved down kind of with Target almost. So if you go back to May 18th, which is where in Target's chart, like you mentioned, Target's been down 10 days in a row. That's kind of where it started, was May 18th. Walmart was at $151 a share. It's down to about 147 right now. So instead of the market kind of rewarding Walmart, saying, okay, well, if people really aren't going to be shopping at Target, Walmart's going to benefit from that. They've both been trading down, which shows me that maybe there's some concerns about the overall sector, the overall industry, and not necessarily just with Target specifically.
Well, I mean, it's absolutely concerns over the industry, right? Because Walmart had earnings the day before, and you got a wide range doji on it, even though they had a great report and they had great guidance. And that told you that the market didn't really like it or didn't really believe it. And, the whole sector has been bad. I mean, honestly, if you look what's going on, look at Macy's today. Macy's came out. They did not have a good report today. They're getting beaten up, right? They're seeing a big slowdown. BJ's, another wholesaler, which should be doing good, their report, look at the size of this gap down and go. There's a lot of angst out in retail. We're definitely seeing consumers tightening up their belt out there. People are not spending as much. Costs are up. They're being more careful. So, yeah, you're definitely seeing that in the sector. But I think Walmart's just a better name in general. I mean, Walmart and Costco are the better names in the industry. And Target, again, has the political issues going on with it, and it's dragging on everything. But I think really it's just overall you're seeing consumers are spending less. They're starting to curtail their spending. We saw it on Home Depot in their report, and Lowe's. It was the same thing.
Yeah, I mean, and this is a show about stocks, a show about, the market. So not to get political, but I mean, how do these types of moves where there might be like a news story or something like this kind of affecting? I mean, like from an options standpoint, are you like, what happens to the options chains? Are people piling into puts right now on Target? Are people piling into calls?
I haven't seen much at all. I'll take a quick look here. I haven't seen a lot of activity in Target at all. You don't have. You have maybe 20, 30,000 options traded today, a little bit more, and it's mixed. You got calls and puts. Nothing stands out.
Okay. Yeah, because I mean, it's interesting because we saw something similar with Anheuser-Busch InBev stock.
Yeah.
With another boycott against them. So if this becomes the norm, right? Like that anytime a company comes out with some sort of diversity type marketing campaign or whatever, there's going to be some boycott against it. Maybe what happens is people start looking for those and they rush out and go buy puts on those companies. I don't know.
They might. I mean, I think there's a lot going on. I mean, this kind of started with Disney and when Disney backed their employees, because again, you think about it, a huge amount of the employees in Disney are gay, right? And they backed them against DeSantis, and they've been having their own little private war now with DeSantis down there. I mean, you're seeing this all over right now, and it's just the change in politics. And I try to stay out of the politics nature of it. It just doesn't help me trade. Obviously, we all have strong feelings one way or the other on it, and that's fine, but it doesn't help us with trading. So for me, I look at the chart and I look at Target, and I just say, you know what? I don't want anything to do with this. It's been coming down. It's taking out a 52-week low. Is it oversold? Absolutely. Should it get some type of bounce? Yeah, probably going to get a dead cat bounce of some type. But I mean, even on a day like today, when the market, we're finally having our first really nice day of broad participation in the market today, this thing's still down in red. That's all I need to know.
Yeah, I mean, it's been a tough. You mentioned Disney. I mean, here's the thing: is I think all of these, and I mentioned this earlier on the show. I think we kind of run into a dangerous, type of environment if we're just going out willy nilly trying to kind of destroy these American companies. But I think Target, Disney, Bud Light, like they're all going to be fine in the long run. I think these are just short term. I mean, remember, Mike, a few years ago, there were boycotts against Nike. People were like burning Nike stuff after the Colin Kaepernick commercial, and people were saying go woke, go broke about Nike. That never really ended up happening. I'm sure it had some impact.
The market's about growth, and the one thing none of these companies have right now is growth. Target, Disney, right? So the market's not going to forgive them until they have growth again. And that's part of what's going on here. And, the market wants growth. And if they have growth, they're going to forgive them and say, okay, they're going to look past it. But right now, Disney has no growth. There's, only so many people that can come to the theme park this whole streaming thing, the streaming wars are over, guys. I mean, I know a lot of people like to think that this is going to go down, but I mean, the streaming wars are over now. Everybody's just trying to get profitable and cutting down on content. I mean, see the whole writer strike going on. I heard your last guest talking about Netflix. These streamers are in a world of hurt coming up very shortly with this writer strike, because once they're out of content, they're out of content, and there'll be nothing new to come on and keep people engaged. So, and the big reason we're having this writer strike is because of the streamers and how they treat and they pay the writers specifically. So I think it's interesting.
Netflix has been, Netflix, I think, is one of those cases, like looking at Netflix's stock. If you look at like a weekly stock chart of Netflix, it's a clear sign of, a company that was so growth minded for so long, when that's what was in favor of the market. And then you can see clearly right when the market said, okay, now we don't really care about your growth as much. And the stock plummeted like 70, 80%, or it went from what, $700 to $180 or whatever, $150. And then this company started saying, okay, now that the market is rewarding profitability and not growth, we're going to start cutting costs. We're going to, roll out this new advertising or this new ad-supported tier that's going to bring in more subscribers and bring in more money, and the market's been rewarding it. And I mean, I don't know, like it's been so strong. Like you mentioned, the company could run into problems if it starts running out of content, but right now, it seems like the market's just in love with Netflix.
Well, I mean, it's been one of the stronger names, right? They had a good report. They're not growing anymore. They're in love with it because it's been beaten down. They're in love with it because they have the broadest base in the streaming community. And there's constant rumors they're going to get bought out. Now, I just, given their market value, I keep laughing at that. Every time somebody says Apple's going to buy, rumor Apple's going to buy Netflix, I laugh. Apple would never spend the money to buy Netflix, and they're doing their own thing. But at some point, they're doing their password crackdown now. I'm hearing that a lot of people are canceling over this. I know my daughter got kicked off my account for college, so, that's what happens, right? She got kicked out. But, they're continuing to sit here and they're going to try to continue to build this. The problem's going to come in about a month when they start running out of new content. Everything's on hold right now. Anything that was in either being filmed or in post-production, because they do a lot of retakes, is all on hold. That's when the problems are going to start to come home for all these companies. I mean, just think of regular TV right now. All your nighttime shows are shut down, right? So your Jimmy Fallon and stuff, they're all down. Saturday Night Live didn't have the rest of its season. And, now you're looking at the start of the regular season, your network television's being pushed back too, as this keeps going on, as, they're supposed to be starting to film now and getting ready for the new season. So a lot of different things here, but Netflix to me is a good stock. It's one of the ones that's anointed here. And I think that's the most important thing that we've been talking about when I talk to members is you got to stick with these anointed stocks. And I know I keep saying the same names over and over again, but, you look at what's going on in this market. And, we talked about yesterday how, yesterday was not a great day. The last couple of days not in the market, but Nvidia running right back here, right? 2 days down, coming right back up, holding and fine. Not the prettiest of candle combinations there, but holding okay. AMD, which looked like it could go much lower, came down, kissed the 8-day bounce back. Up huge. I mean, the whole semis. I mean, look at this move on the semis in the last week. You never see this. You don't see this very often. So. If everybody's like, well, I don't want to play these names. Well, this is it. This is where there is to play right now. And I hate to say that to people, but this is what you have. You have to play what the market gives you. They don't want the banks, even though they're up today, right? They don't want the banks. They don't want energy. They want growth names. And we've talked over and over how narrow this market is, and the market's very narrow. There's like 10, 12, 13 names, whatever it is, that are leading this market rally. But the market's staying up. And if you look at the SPY today, guess what, Aaron? We're almost back to a 52-week to the recent highs and not far off the 52-week high. So even though there's not a lot of names participating, the market continues to melt up based upon the semis and these AI names.
Yeah, I mean, I think that's it's kind of like a weird market almost right now, where I think, like you said, like we're getting back up to near those 52-week highs on the SPY, but for a lot of people, it doesn't really feel like that. I think is that do you think because unless you're like properly weighted into these Nvidias and other like big names that have been, really like killing it, that you haven't been tracking the market?
I think that's exactly it. I mean, so this is a chart I go over every morning with my members. This is tracks breadth in the market on the NASDAQ. And you can see where breadth is at. While we've had this big rise in the NASDAQ, we're at a multi-year low here, just bouncing off of it this morning. It tells you how narrow this is, and you have to stick with the narrow names as much as you hate it. And yes, at some point, they're going to come screaming in, right? Because you cannot have a dozen or so names that are going to keep the market moving higher and higher forever. Eventually, this has to broaden out. We're in trouble. But until then, these are the names you play. And, you look at what's going on today and you see names like Crowd, which, by the way, there was nothing wrong with that report last night on Crowd. So hang on, let me go back over here and go grab it for you. Right? It was a good report. Guidance was decent, but they dumped it. Look at this. They brought it all the way back today. All the way back up, $20. What's the market telling you here? It says it's paying for growth. The initial thing was dump it. They're paying for growth. The market wants to be these growth names. And everybody keeps asking me, like you're asking me about Target. At some point, they're going to get the move back, right? At some point, Target will come back in vogue, and Walmart and Costco. But right now, it's about AI and the growth names, and everything else is just, it's not important right now.
Well, speaking of Target, I do see that it's kind of coming up a little bit here in the past 20 minutes. And I know you mentioned, I don't know if you can go to like a 2 or 5 minute chart or something. But I know you mentioned that the like options specifically hasn't been that crazy. Like, maybe not a lot of people loading up on puts or anything. But do you think there might be a lot of people out that are just outright short right now? Maybe they're not buying puts, but they're just like selling the stock. And then if the stock doesn't go down, for a couple days, that maybe people would start having to cover?
So, yeah, Jay, by the way, Crowd ran a lot into the earnings. So, shorts, like everybody tend to get greedy, and sometimes they overstay their welcome. And sometimes you get a bounce like this, you start running up higher here. But again, I mean, you're looking at this little bounce here, and we've gone from, we went from a low of 126.75. We're just shy of 130 today. But I look at this in the scheme of things. I mean, if you're short, you're not going to cover. You wouldn't be shorting down here, and you might be taking some profits. But I would have my stop somewhere up at the 8-day. I would not be sitting here trying to cover this. I mean, it was overdue for some type of bounce move here, and we call this a dead cat bounce. And that's all really I'm seeing here is a little bit of a dead cat bounce, oversold, extended to the downside, 10 days on the downside. It was just overdue for some type of bounce. That's how I read this. And I know a lot of people want this thing to go up, but I see more problems ahead. And Target has been one of the problem retailers for the last couple of years. They always seem to have issues.
Yeah, and I think like the bottom line, like you mentioned, the market likes growth. And for a lot of these retailers, whether you're talking about Target, whether you're talking about Walmart, there isn't a ton of growth. There is growth, but maybe not as much as if you look at some of the tech companies, et cetera. And their margins historically aren't like amazing either. So any type of economic slowdown really hits them. Any type of boycott against their products hits them. They're basically companies that if everything's ticking along normally in the economy's well, you can expect those stocks to do like moderately well. Like they're not going to usually, like Target's like in a good normal year is probably not going to go up like 20% on the year, but it'll probably go up maybe 10%, whatever. So like the way I see it is in any type of hiccups, whether you're talking about from a macro, whether you're talking about from a specific company perspective, can really hit these stocks that don't have a lot going for them outside of the fact that they're big brand names that people, frequent them a lot.
Right. And again, this market's looking for growth. And, I've been sitting in Apple. I bought calls on it. I think it was yesterday. It was yesterday, the day before. I don't remember. And I'm sitting in them for a move into next week. And because they have their event on Monday, they have their developers conference. And I can tell you right now, the market is betting they're going to say something about AI in that developers conference. So you have this move here to a 52-week high today. 182 and change is your all-time high on it, and it's not far. And look at how nicely this one's not extended. It's just starting to get up there. So I'm planning on taking those calls into that developers conference and see what happens from there. Again, it's about looking out at names that there's opportunity. And Apple's been a strong chart. Every dip to the 21-day for the last 3 months has been a streaming buy. Look at this last week, again, came down to it, bounced off of it. But everybody wants to talk about names that aren't moving. For me, you stick with what's working right now. And right now it's growth names and anything associated with AI. One that the room picked up on that from one of my members, Doug there, called out the day before it moved was Adobe. Look at that size of that 3-day move on this as they finally put out their AI, what they're doing with AI. So I just feel this is where the market wants to be, Aaron. And I know everybody wants to talk about a target and this and that, but that's not where it is. One of your members asking about SoFi. I'm long stock. I bought some stock a couple of days ago in SoFi. I sold a bunch of it. I may buy some back if it comes back in easy, just as an FYI. On little names like this, I don't like to play calls. They're very hard to get a profit on or move. I'd rather just own the stock.
There you have it. All right, well, let's catch up. I'm going to catch up on the chat real quick, see if we've got any other stocks. We've got a couple minutes left, Mike. So are there any stocks that other than SoFi you've been watching recently?
I'm in it. I bought it a couple days ago. I bought it on Monday, on Tuesday morning on the Fed, when I heard what was in the deal for the Fed debt limit. And I sold half of it yesterday, somewhere up around 680 or something like that, 685, I don't remember. And then I'll look to buy more back in if it drops again, or I'll just let the rest of it run.
There you go. What about just from like a overall industry standpoint? Like, do you have a spot on the SPY or the Qs that you say you'd want to, maybe get long or short?
Well, I mean, to me, the SPY, the next target for me is this 52-week high, which is up around 4. This says 426. It depends which one you look at. I'm not taking the dividend out there. Do it this better. There you go. So I'm looking at 431 area for me on the SPY. That's my next target on the SPY. The Qs here are just much tougher here at this point. This chart is off the hook. It's hot. It's not great participation. I'm leery of chasing anything but individual names, and I'm pretty much not playing the indexes right now.
There you go. Yeah, I think right now, like SPY's Qs have been outperforming the SPY. Dow's kind of been lagging. IWM has been the one that's really. Do you mind pulling up an IWM chart?
That one's been hell. Honest answer. That one has just been beaten up. It can't get a bounce in it. It's going to struggle to really bounce until the regional banks start to come in. The banks come back because there's so many of those little banks in the IWM. Yeah, there's some PayPal news. I see a downtick on it. I don't know what it is. To me, try to break 2 weeks ago. Tried to break above the 200-day and got to the 100-day and failed there. So you have pretty well defined resistance right there at that 100-day moving average right now up at 180, and it's not trading well. So for me, this is an area I tend to avoid if it's not trading well.
Yeah, I think like. I feel like small caps, if the market's going to do well, like if the SPY is going to go up another 10% from June 1st, 2023 to June 1st, 2024, I feel like small caps are going to have to participate. Like, it can't be just just the few big name companies like carrying the whole entire market, or maybe it can be. I have no clue. We'll see.
These names could carry for a while, but you can just need rotation. You have the industrials, you have the financials, you have the energy sector, you have the utilities, you have the pharmaceuticals, the biotech, your consumer staples. All these are underperforming right now. Your materials like steel and copper and stuff are all really underperforming. There's so many places they can move into this market and rotate and let these names cool off, but they're choosing not to right now. So you're not seeing, today you're getting some participation. When I look at market breadth right now, it's around plus 1,500. When you get to that level, I consider it a trend up day if it holds in that area. We started out negative on the day, just to give you an idea on market breadth. So market breadth has improved. And this market, for whatever reason today, took off for no reason. There was no news when all of a sudden we were chopping around and we blasted off for 10 minutes, made a nice 30-minute flag. And then, this is a melt up, guys. And this is a holiday week. I think everybody kind of forgets that, but we're in a holiday week. And you tend to get melt ups during holiday week. And you can see this, right? Once we broke above here, this was your suddenly big volume candles. We came up, you based here for a little while, broke the range, retested it, and then now we've been melting up, and we haven't even touched the 8 EMA on the 5-minute chart on the SPY. So it melt up, and what they did here is they caught everybody short, right? Everybody yesterday was doom and gloom. We had that massive market on sell yesterday of $6.4 billion, and I said, don't worry about it. It's the end of the month. And everybody's like, I don't understand. I'm like, it's the end of the month. They're taking profits, a little bit of rebalancing. And everybody's like, but look at the drops on Apple. Look at this. And everything came roaring back. They caught everybody trying to short, and they've done it a couple times lately. And I think that's what everybody needs to realize is if it's your short, unless you're quick, it's been a tough market. Again, I'll go back to my SPY chart before I let you guys run here. This day right here, a lot of people went home short, right? First one, this one right here, a lot of people went home short. We gapped up, we trapped everybody. We gapped down, we looked sold off on this day, gapped up, created an island bottom, trapped everybody. Guess what we did last week right here? Lows, a lot of people went home short, gapped up, trapped everybody again. And so, for me to want to get short, we're going to need to see a change in character in this market because this is just chop. This is not the market trying to sell off, in my opinion. At least not yet.
Yeah, and I think you probably will have some sort of a sell-off, a pullback on the overall market, but it probably won't come as easy as just everyone's loading up on puts and then the next day SPY's down 2-3% and everyone takes their money and runs. Like you said, it could chop for a little bit. People are short and they lose money, and then all of a sudden, then you get your pullback once you pull your shorts off the table. I personally, Apple right now is getting close to 52-week highs, almost back at this $3 trillion. It seems like I almost am questioning, is there a buying opportunity here at some point, or would you be waiting for any big pullbacks?
On Apple or in general?
Apple or in general. Apple is so heavily weighted in the S&P 500. I feel like if Apple keeps going higher, so will the SPY.
I think Apple's a name to watch because that's the point. If it goes higher, so will the SPY. You have your all-time high sitting up here around the 182 mark. You're looking for a pullback. You've had pullbacks here. You've had 3 of them. We just went over on the SPY, and people didn't want to buy then. I think you're going to have to right now buy shallow pullbacks until this market decides it wants to come in. I see a market that is finally getting its feet under it. Everybody wants to talk doom and gloom, but look at this. Here's a 5-year chart of the market. Last year was a horrific year. I've been, everybody telling me all through here, we have to retest last October lows. We have to retest October lows. We have to retest the October lows. Well, guess what? Came down, put a series of higher lows in here, and here we are breaking to the upside. And you take out the 52-week high, and you're not that far from all-time highs. The Q's here saying, yep, same thing. I already took out my 52-week high, and I'm really starting to cruise here. So yeah, you try to buy dips, and you try to turn out the noise. And that's the one thing I think most people don't do a good job of is they get too caught up in the noise or listening to the wrong people or two people, screaming that this is bad or this is that. Yes. Is breadth bad? Breadth has been atrocious. It's a very narrow market. But if you're going to listen to that or listen to, well, the Fed's not here or talk about this, then you're going to be missing out on these moves. And what we've been focusing on is just trading the individual names. Whether today it was Meta today and what else did I trade today? I don't even remember anymore. It's been one of those days. I traded ES briefly and then something else. It's been a long day. But it's just finding the right names. NVIDIA, Tesla, Google, Amazon, AMD, right? All the names that have been in play, sitting in Apple right now. We've just been rotating in and out of these names on a daily basis and trading the ones that are strongest and have the most volume.
Yeah, and I think that's a good way to do it. Look where the strength is. Look where, look where. I don't know. That's why I think something like Apple. When something is that strong, I'm always more inclined to see if I can get in on the long side rather than try to hop it and short it.
Yeah. And Chris, I see you saying there, a rising bear wedge. Is that a rising bear wedge on the SPY? This is where I try to say, don't go looking for problems. Problems will present themselves on their own. Look at the price action. Don't go looking just technically. Is it a rising wedge? Yeah, it's a rising wedge. Doesn't mean it has to be bearish. And I think that's the one thing I would say to you here right now is, a lot of people were pointing out head and shoulders pattern. Well, that head and shoulders pattern didn't play out, did it? Everybody's looking for reasons for the market to break down. people aren't looking for reasons for the market to keep breaking up. And I can say this, there's a ton of money sitting on the sidelines, and if FOMO kicks in, look out. This market's going to rip everybody's face off, especially if this market starts to get the idea that the Fed is going to pause raising rates in July. And we have a whole month of data and a lot to go between now and then. But if the market starts acting like that's going to happen, this market could scream.
Yeah, and I looked at it earlier. The CME Watch tool is showing like a 75% chance there is no rate hike in July.
Yep.
That number was higher just a few days ago, so certainly looks like that could be a possibility, at least the bond market's pricing that in. Mike, well, thank you for joining us today. It's good to get you back on. It's been too long, so for sure got to keep in touch. And if you see any crazy market moves or options trades you want to come on and talk about, just hit me up, man.
You got it, man. Thanks, AB. Zinger Nation. See you next time.
All right, enjoy the rest of your Thursday and have a great weekend.
You guys too.
It seems weird even saying that happy Thursday. Like, it doesn't feel like a Thursday, but I guess that's the good thing about a long weekend. Last weekend, as you come in, you only have a 4-day week this week. So flying by here. I thought it was like Tuesday, honestly, when I came in here. But all righty, guys. Busy show today. We had on Steve Kalish and Robert Roy, Options Mike. Thank you to everyone in the chat that joined us. Jay Rice, Easy Mike, Chip Greenside, Utsav, Sydney Osborne. Shout out everyone in attendance today. Chris Kipp, hope to see you guys on the next Benzinga Live. Should be next Tuesday. There's a chance. I'll be doing the show remotely from my home office in St. Louis. A little throwback Benzinga Live to how we used to do it way back in the day. If you're an OG and you remember, my old setup before I moved up here to Detroit. Either way, thanks for everyone tuning in with us today. Please smash the like, subscribe to the channel if you have not already. We will have some special fun videos to play right now after the show, so please do not go anywhere. I'm going to go ahead and play a little Benzinga Pro commercial, and we come back. We've got some in-office content we're going to be doing. Our wonderful Carly, we've been recording some more in-office content, so hope you guys check out for that. Please leave feedback in the comments if you like the content. If you kind of like it but think it could be better, let us know what we could do. If you hate it, maybe don't say that, but, I don't know, maybe reach out to me. I don't know. We'll try to figure. Just let us know what you think, but be nice. All right, we're going to play this commercial. When we come back, we'll be playing those videos.
Did you know nearly all stock price changes of 10% or more result from a single news headline? That's right. News headlines have a unique ability to drive stock prices up or down. These news catalysts create trading opportunities every day. All you need is a little help to reach out and take them. And if you're looking to grow your portfolio, it doesn't matter if your investment budget is small or big. An easy-to-read stream of news headlines will increase your opportunities to profit from price changes in the stock market, consolidate a knowledge-based investment strategy, and grow your portfolio. All you need is Benzinga Pro and its powerful news alerts, price tracking, and portfolio monitoring to make a positive change in your trading performance. We've already helped thousands of retail traders across the world, and they could not be happier. Increase your market knowledge, boost your exposure to big movers, and make informed trades before major price changes. The opportunities are all around you. Subscribe now, and we'll skyrocket your portfolio today.
Hello. What the hell?
Welcome to Tea Time. I'm Carly.
And I'm Hannah.
I'm Aiden.
And we're planning this clink. Clink. Okay, try the tea. We haven't tried it yet. I need to prepare for this hot, juicy gossip.
It's pretty good. It's pretty good.
I can't really taste it. Just tastes kind of like water.
Welcome, everyone. I'm a special
Okay,
guest.
so here's our special guest for today, Aiden.
Hello.
He
What's up?
Hey, Aiden.
really wants to introduce himself.
He's always talking about celebrity gossip and drama, so we had to bring him on here to discuss with us. He always knows the piping hot tea. First thing we're going to discuss, unfortunately, this week, We have lost the queen of rock and roll, Tina Turner, at age 83. Rest in peace to Tina Turner. I remember listening to her like summer days in the car with my mom growing up. I will always forever have a love for Tina Turner.
Yeah, see, I'm really bad with celebrity names and like she has a song, what is it, like The Best? Is that a song?
I don't know. I'm familiar mostly with like Proud Mary, keep on
You
burning.
really wanted to sing. You've been practicing that for so long.
Rolling on the river.
Give us your best Tina impression really quick.
Y'all just
I
got it.
don't want.
We wouldn't have our Beyoncés, our Lizzos, any popular artists that we, like a lot of us love, without Tina Turner. So both of these artists this week have posted something online, or Lizzo on her tour, just to honor Tina Turner. Rest in peace to an absolute icon and legend.
All right,
Tina
next
Turner.
topic.
Okay, next topic, apparently. Earlier this week, we did a little bit, and we talked about Euphoria for a little bit, so we're going to bring that topic back up. In the news recently, a lot of people have been talking about Sam Levinson and his new TV show, The Idol, starring Lily Rose Depp. And
What the fuck are you talking about?
You haven't heard about the show?
No, I don't know who any of those people are.
It's made
First
by The
of all-
Weeknd. You know who The Weeknd is.
Tell him
Okay.
who Sam Levinson is.
I already know, like, all of his new music's probably in your playlist. You're one of those people.
I know 2 songs by The Weeknd.
Okay, that's a
It's
lie.
Blinding Lights and there's one more and it's
Yep.
something about crying. It's Save Your Tears.
You
Good
know
job.
more than
Wow, I'm
that.
so proud of you.
If
Give
you
him
gave
a-
me-
give
if
him a
you
pat
gave
on the
me-
back.
If you put $100 bills out in front of me to name another song, I'd go home poor.
You don't know
I,
the
I
Hills?
No.
Yes, you do.
Tell me, I seriously
Sing
don't.
it, Carly.
Wait, which one?
Oh my
The-
god, don't sing it. Just read the
Don't
words.
make me sing. You don't know Call Out My Name.
Oh, I do know that one. I
See?
do
What
know
about
that
he
one.
just did like the cover of?
Wait, we're so off track. Going back, tell him who Sam Levinson is.
Sam
This will help.
Levinson is the director of Euphoria, so he writes it.
And I was supposed to
He-
know that.
No, but it's okay that you didn't.
Okay.
So,
I've never watched Euphoria. Can someone give me a
You
quick?
literally just said last time that you had.
I
watched
said
some
I've
of it.
seen clips on
Okay.
TikTok of the
No, okay.
Ford girl because I think she's very influential and I really like Broncos.
He really likes Broncos. Everyone, you heard it here first.
you heard it here.
So besides the point, nobody cares.
What is the point of Euphoria? Please, I'm just interested. Like
It's about teens living their
And the
lives,
struggles.
and having sex and drugs, and that's what it's about.
And they're
And people were angry when he came out with that show because they said it was over sexualized for young children to be watching.
Which
and now
is
he's coming
true.
out with another show. And this topic is brought back up because the new show is supposed to be all about empowering women in the industry. And somehow all of the promos just show her half naked, like twerking. And
that's an issue.
yeah, so people are a little
Is it?
angry.
I mean, we all know sex sells, but if he already had this kind of running going for him, and now with this as well, and it's supposed to be about women empowerment, like that's a thin line you're crossing there. I think that parents should kind of regulate what their kids are watching, and you should be able to create the art that you want to.
What are you
But-
talking? Like, I mean, you're right.
So I'm saying
Why?
parents can regulate what their kids watch, and he can create what he wants.
Oh, then cool. I agree. Pretty simple.
Well, it was until you sat down at
Like-
tea time.
Like half of the rap music out there talks about like the worst things ever, and
Right.
you
That's
know,
what
Just
he
has to be
actually
regulated.
He's into because they went to the Cannes Film Festival recently, and him and Lily Rose Depp tried defending the show. And one of the things that he says is, we live in a very sexualized world. The influence of pornography is very strong in terms of the psyche of young people in the States. We see this in pop music and how it reflects the underbelly of the internet. With this show and working with Lily, we had a lot of discussions about who Jocelyn was, the main character,
Okay.
how she's angling, and who she's playing to, and the sexuality that comes out of that.
I think it's really
Mm.
a big issue when they're like targeting kids, kind of like Jewel. You know, remember Jewel like targeted their vapes towards young children.
Yeah.
I don't care if there's vapes out
Did
there.
they really target it to young children?
Yes,
though?
100%. To go back to your show, because I'm sure you're gonna want to bring it back. I think it's fine they create the content, but it just depends on if they're targeting children.
Who
Like
they're
if they're
marketing
running,
it to, right?
if they're running Netflix ads for this towards like young children, then it's probably an issue.
Right.
Like
Which, if the ads are
and
on
then
TikTok,
you know, and then you get into the whole conversation of like
Well, then it's also hard because
your perception. Well, yeah,
so
but
how
then
do
it
you
could,
know who's gonna see what at what age? You could be posting it. For
okay, that's a whole bigger issue. I was like 10 years old on r/gore on Reddit.
Okay.
Okay.
Last topic we are going to discuss. Gap is suing Kanye for $2 million.
That's weak. Those are rookie numbers.
Why is he getting sued, Hannah?
He's getting sued because when Gap and Kanye did their
Collab.
collaboration together, they ran out of space so that Kanye could do pop up. And the space that they rented out, they gave Kanye like full control over it, but he wasn't supposed to do any actual like changing to the exterior / interior.
Okay. And he
And
probably did.
yeah, so he changed like a bunch of stuff. He like built a tunnel outside. He took out a bunch of railings. There's a few other things on the list, but it was.
What do you think Kanye's net worth is?
I don't care. Honestly, I hope it's still plummeting because he's a piece of shit.
No, what's his net
Let's
worth?
look
Like,
it up.
I already have the answer. Don't look it up. I want you to
I know, I
guess.
was
That's
gonna
why I
say.
asked. I
I'm gonna
asked
say,
for a
like,
reason.
Is he a billionaire?
search this
no,
up, I'm
he's just a
leaving.
millionaire, right?
I'm done.
You fucked it up.
His net worth is $2 billion.
Honestly, it's probably best he leaves.
Yeah, he was kind of annoying.
Yeah, I don't think we should have him back.
No, and
No.
that's okay. So,
Okay.
just me and Hannah.
So to finish it up, he pretty much damaged the whole interior of the pop-up shop that they
Right.
rented out.
So he will get sued.
Well, yeah. So Gap is suing him. The company itself, Art City, was trying to sue Gap originally
Oh,
because
got
they
you.
were upset and they were holding Gap accountable. But Gap is like, we didn't do this. We had no idea of any of these changes or constructions going on, so we don't want to be held accountable for this. So then they now are suing Kanye so that he can pay for the damages on top of a $2 million compensation for the damages to Gap,
Wow. And this is already after Gap, like, ending their collaboration as well, right?
along with every other brand.
Every
that
other
did.
brand. Damn, well,
Yeah.
Kanye, if you watch this, do
Which
better. Is that Aiden crying over there?
Aw, we hurt his feelings.
Aw. Tea time.